What is going on, guys? Stas here. Welcome back to another video. So listen up, guys. We have a lot of red across the board today in the stock market after we got the March CPI data this morning. So we have to break down the CPI data, the charts here, what's going on in the stock market, and a couple of stocks I'm watching. So hit the like button, make sure to subscribe, and don't forget to get your 7 fractional shares of the Mag 7 stocks from Moomoo by using that link down below, checking out the QR code right here, or by going to stassurfest.com/Moomoo. Once you guys open up your account and fund it with at least $100, you get those 7 fractional shares of the Mag 7 stocks. And with that being said, guys, cheers. Let's dive right into the video. So again, we got the CPI data this morning, and well, you guys can see for yourselves here, everything collapsed. Boom, just like that. We were at 521 on SPY. We got the data at 8:30 a.m. on the East Coast, and then we got down all the way to $511 on SPY. That was a pretty much 2% drop in the snap of a finger as Triple Q went down. Let's see, around from 444 to 434 essentially. We dropped about 1.8% right after we got the CPI, and the Russell, which got hit the most. Holy smokes, guys. This was at 2079. So yeah, at about 2,080 points yesterday. We got the data and we got all the way down to 2025 at open. That was a 2.7% drop. And by the way, the Russell's now down 2.6%. The Nasdaq's down 0.8%. The S&P's down 0.9%. And we have the Dow Jones down 1.1%, with the VIX only being up. You'd think it'd be up way more, but it's only up 3.4%. So before we dive deeper into the charts, my thoughts there, and some other stocks that I'm looking at, let me actually dive into the CPI data, the actual release. Let me pull that up and show you guys. By the way, if you're finding value, hit the like button. Make sure to subscribe, by the way. Funny enough, I think 50% of you guys watch the content, but you're not subscribed. So if that's you, what are you doing? Make sure to subscribe. We're trying to get the 50,000 subs this year. I appreciate you all for tuning in, as always. So you can see right here, if I zoom in a little bit, hold on a second, bear with me, guys. There we go. Over the last 12 months, the all items index increased 3.5% before the seasonal adjustment. You guys can see the index for shelter rose in March, as did for gasoline. We'll talk about that more here in a little bit. And the index for all items less food and energy rose 0.4% in March. That's also known as the core CPI, right? As it did in each of the 2 preceding months. Indexes which increased in March include shelter, motor vehicle insurance, medical care, apparel, and of course, personal care. The indexes for used cars and trucks, recreation, and new vehicles were among that decreased over the month. We'll take a look at that here in a second. And this chart right here, guys, shows you the 1-month percent change in CPI for all urban consumers, seasonally adjusted from March 23 to March 2024. And you guys can see we're above from where we were last year. Last March, we had a 0.1% reading on the month. We just had a 0.4% reading. And over the past couple of months, we've seen acceleration in inflation from 0.1% in October, 0.2% in December, November, 0.3% in January, now 0.4% in February, March. What's that April, or not April, excuse me. Oh yeah, April. What's the April number reading? What's that going to be looking like, right? Is it going to be another spike, or are we going to see a drop off? Which, guys, think about it. Last time from March to April, we saw a huge run up in inflation. Last year, March again, last year 0.1% to 0.4%. What if we see a run to 0.5 or 0.6% in April? That's a risk, which I'm not for sure calling for that, but that's just something to think about here. And this chart here shows you the 12-month percent change in CPI. We have the all items in blue, all items less food and energy in red. That's also known as, again, the core CPI. So let's quickly break down these categories, guys, see what's going on here a bit. So for food, we saw a 0.1% number in March. That was flat or 0 in February, so that increased a bit. Food at home stayed the same, flat Same with February, right? It was at 0, so that's good. It looks like here food away from home was at 0.3% in March. It was 0.1% in February, so food away from home did go up a bit. That's at 4.2% on the annualized number. And let's see here. Energy was at 1.1% in March. That actually went down from 2.3 in February, so that's good. Looks like here gasoline went down on the month. Fuel oil was negative 1.3% in March. It was 1.1% in the positive in February, so that came down. That's good. Let's see. New vehicles here, 0.2% in the red, so negative 0.2%. In March, it was 0.1%, negative 0.1%, excuse me, in February, so that decreased even more. That's good. Used cars and trucks, negative 1.1% in March. It was 0.5% in February, so that decreased as well. So we're seeing a lot of these notable categories, decrease. We're seeing that. So why do we see that 0.4% number in March? What really held up that number? It looks like it might have been gasoline. Even though that did decrease from February, it's still up 1.7% on the month. I mean, categories like transportation services, that was pretty much the same, actually a little bit higher. Looks like electricity, that was at 0.9% in March. It was 0.3% in February. Either way, guys, that's what we're noticing right here. And why is the stock market selling off? Let's end it here. Let's transition with this. Why is the stock market selling off? Well, guys, it's because we were expecting all of these rate cuts. How many were we expecting? 3 rate cuts, 4 rate cuts, whatever it was. And now we're getting data that is showing inflation is still pretty hot. I mean, it's not smoking hot like it was a year ago, year and a half ago, right? Whatever that was, even 2 years ago. But it's still pretty up there, and it's fighting in that mid 3% range. And what has the Fed said? They're data dependent. So now we're seeing, okay, maybe the Fed's not going to cut rates 3 times. Maybe it's 1 time. Maybe they don't cut rates until after the election, maybe right before the election. It is an election year after all, isn't it, guys? I mean, there's a lot that's going on right now, but we're noticing, okay, maybe we're not going to get as many rate cuts as we thought, and the stock market is starting to price that in. And you could argue that maybe too many rate cuts were priced in to the stock market here. So we're noticing, again, the Russell's down almost 3% on the day right now. We're seeing a pretty big sell-off there right by the 180 SMA now on the 4-hour chart. We have Triple Q seeing a pretty big sell-off. You guys can see, now we're under the moving averages on the 4-hour chart. We're pretty much testing the bottom of the wedge here. We're at the lows that we were at about a month ago on Triple Q. And on SPY, which is the S&P 500, we're also under the moving averages on the 4-hour chart. And now we're pretty much at a multi-week low on this ETF. Is it the end of the world? Is the uptrend over? Is the bull market over? No, guys, it's not. We're still clearly in an uptrend. We're still higher now than we were literally a month and a half ago. We're still looking good, but we're just getting a bit of selling because, again, maybe we're not getting all these rate cuts like we thought, which I wasn't really expecting all the rate cuts anyway. Did we not talk about that in previous videos? I mean, look, I don't really trust everything the Fed says. Again, they're data dependent. We have to be careful here, right? So what do you guys think? Let me know your thoughts in the comments. Hit the like button. Don't forget to subscribe and get your 7 fractional shares from Moomoo of the Mag 7 stocks with at least a $100 deposit by using that link down below, checking out the QR code right here, or by going to StockSurfAst.com/Moomoo. And listen to this. If you want to opt for the other option, you can bring your account over to Moomoo for the first time, and you get a 1.5% cash reward match up to $20,000, I believe, of a balance you bring over to Moomoo for the first time. So check out the link down below. Again, go to StockSurfAst.com/Moomoo or check out the QR code right here. And with that being said, guys, cheers. I'll catch you in the next one.